Vishesha. Let me bring on board Sameer Dalal, CEO, Natvarlal and Sons Stockbrokers, joining us this morning. Sameer, you're very likely going to see a gap down of 200 points, or this uncertainty not at least playing out well on our markets, even though US markets seem to be going from strength to strength, likely because of earnings, AI trade, and the sort. But give us your take with regard to how you're assessing earnings, especially in the consumption segment. You've got a slew of earnings which have come out. How are you assessing them? And do you believe that we've topped out in terms of the kind of margins that we're seeing within that FMCG basket?
So good morning to Harsh and the rest of you. So very simply put, you're right. Indian markets are going through a bit of a difficult period versus what you're seeing in the mother market, which is the US. But the reason for that is the fact that we are oil importers. And with crude at $104 a barrel, it hurts us. US, on the other hand, are crude exporters. Yes, it hurts their inflation because their gas prices are up. But for the economy as a overall, when you're exporting at that price, you're bringing more money into the country. That's great for the country as an overall thing. So that is the dichotomy that's happening between India and the US. Now, coming to the earnings. Look, some of the FMCG companies have reported very, very good margins. You've actually even seen some of them reporting volume growths, which are 9 and 10%, which came in as a bit of a surprise on the positive side, to be very frank, because we were working more with like 4 and 5% volume growth. So that is a good thing. Are margins topping out? I'd likely to say yes, because what's going to happen is you're going to see at some point in the very near future, crude, petrol, and diesel prices being hiked. And especially when diesel prices get hiked, it affects the logistics space, right? Which pushes up costs of shipping goods from manufacturing location to the end consumer, which in effect, somebody in the value chain has to take a hit. Either the logistic companies takes it, either the manufacturing or the retailing. Somebody in the value chain has to take a hit. And I'm sure it'll be shared between all of them. So some margin peaking out, yes, very, very possible. Now, the bigger problem is, which I think the market is choosing not to address is we are looking at Q4 results which did not have bulk of the problems that happened. The pain point of a lot of the companies is going to actually be felt in Q1 because a lot of them were sitting on low cost inventory, Q4 prices. They were, they had kind of more or less finished manufacturing. So profitability was not really affected. I think Q1, you're going to see numbers quite subdued. Companies not able to produce to their full capacity, economy showing signs of slowing down. So it's better to look forward than to look in you look in the windshield when you drive, not the rear view mirror. I keep saying this. And by looking at Q4 numbers and getting happy about some of them is not the end solution.
Interesting. Sameer, curious to know, how is it that you've read into Prime Minister Modi's comments at the Hyderabad rally? I mean, that's the big talking point in the market, right? And what could be the repercussions on OMCs, oil-sensitive companies, some of the travel and tourism and hospitality businesses, and of course, more importantly, on gold demand?
So honestly, Aisha, I really don't see, people who want to buy gold jewelry are going to go buy gold jewelry just because Narendra Modi ji has said कि आप एक साल के लिए purchase मत करिए doesn't mean that it's not going to happen, right? I was trying to say that me as an individual cannot decide whether I should travel abroad internationally for a holiday or do. I mean, you're putting certain restrictions on people. I understand the country needs it, but I think also what the country needs is for you to do more of development and less of freebies. So I hate to say we just had a great victory for TVK in Chennai, but it's all come at the cost of freebies, right? Everyone is offering freebies. One of the few things the government needs to first get its act together before they tell the people what to do is stop doing Robin Hood politics, which is basically give everything for free, charge the taxpayers and do all these various schemes to just get votes. So if you stop doing that and start using this money for more investment for actual projects, I think that could be a far better thing the government could focus on. Maybe, government, if you look at it from petrol and diesel prices, if the government is so worried about all these problems of cost rising, 50% or 55% of all petrol and diesel prices is taxes. Reduce your taxes. Why are you saying that, look, we are taking a hit? If you reduce your taxes, you could take a hit. Right now, you're putting all the losses on the OMCs. So when the prices rise, yeah, of course, OMCs will stand to benefit. The losses will come down, but are they going to make a profit? No, they're not. So for me, those stocks are a definite avoid at this point of time.
But one would say that there are multiple levers, right, to this very quickly to try and add to that argument. The multiple levers out there are also the fact that you could see increase in duties, especially with regard to gold. Do you therefore, just from a likely risk perspective, stay away from some of these stocks? Is that the way to play this?
So duties on gold stocks, very possible. I mean, not on gold imports, very possible. But has gold ever, when we've had various duties on gold, have people stopped buying gold jewelry? No, they haven't. Maybe what will happen is people will buy smaller quantities or smaller because the prices are up. If I have a 5 lakh rupee budget, I might buy only 5 lakhs. So maybe I'll get less gold. But am I saying if there's a wedding in my family, I'm not going to buy gold, or if there's whatever reason I'm not going to, those kind of things are not going to happen. You put more import duties on crude. I mean, that's just kind of negative overall for the whole economy. So you can't look at everything in isolation. One speech doesn't make, if you do that, Indian markets are already getting butchered. I think they'll get butchered even more because foreigners are going to say that this is not an economy where you can invest, where government has they say we do ease of doing business and we allow companies to do things. You're constantly putting regulations and kind of hurts the India sentiment also. So is it going to happen? No. Am I going to sell out on gold jewelry companies like Titan, a Kalyan jeweler? No, I'm not going to sell out on them. I think they will continue because the formalization of the economy continues. The problem is, I think, if this war doesn't end soon, and I've been saying this, and actually we are way past the war ending soon. If but we are going to see an hit, and I think FY27, you're going to see earning downgrades continually happening over the year. You won't see it now, but after Q1 and Q2, people are going to say, oh, now they cannot reach these targets. And then you're going to see the markets probably coming off. So apart from mutual fund managers who come on TV and say, the Indian economy is doing well because they don't want the inflow to stop. Because if the inflow stops, who's going to buy the stocks that the FIs are selling? I think the stock market is probably ignoring a lot of the pain points that are going to come into the future, in the near future.
Okay. So